RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our public broadcast. 4 minutes past the top of the hour, not too tardy today, so that's kind of good. I suppose I should just let the community know I was going to do an interview with one of these social media influencers yesterday, but unfortunately they had to bail at the last minute, so we won't be doing that. Maybe next week, who knows? We'll see how that goes. But I do see the market's kind of soft here for things like, well, actually, maybe I think things have firmed up a little bit. So clearly, crypto, I think everybody in the crypto space is dying 1,000 deaths right at the moment. We've got our breadth indicator embedded heavily on the oversold. So I, as a contrarian, I actually like what I'm seeing here. And now it's just a question of, can we find some W's to come in? Maybe some bullish divergences in half decent trade locations. Been talking quite a bit with this community, on this channel about how typically I have found in the past 10 years following this crypto space, it likes to bottom into this July 4th and probably following the July 4th holiday weekend. So I've been a little bit leery about getting too uber bullish through here. And one of TRI's principals, Julian, does a show every Thursday. And I would have to say he has a very unique perspective on the market. And past couple of weeks, his presentations, he did it on Friday this past week, but normally he's on Thursdays. But he was giving a very cautionary note, how crypto usually doesn't like to bottom without some horrific face rip. Maybe face plant. I'm not quite sure what the best expression would be. And I hate to say it, but I do think that he was right. Very good call. I mentioned it a few times over the past week or two. That cautionary words here of wisdom, I think, are very wisely heeded. It is interesting. Crypto top 30. I guess about a year or so ago, we had a whole bunch of these names all heavily spitting up 5s and 6s, which are kind of like at the bottom end of the range and starting to firm up. And we're starting to see the number of 5s starting to grow again. So you only get that when the market is right at the bottom end of its 52-week range. And then should we get the moving averages to actually turn back bullish, then these things will start spitting up 6s. So it is interesting to see that list is starting to grow nicely. It's going to take some time here. There's no doubt about it, though. We're doing some pretty significant technical damage. I suppose just to give you a really quick view, although we don't really like on the free broadcast to go into too much detail. But crypto breadth, you can see it's just right on its knees. Everything is just uber bearish. So, like I said, as a contrarian, started off this conversation. As a contrarian, this is exactly what I want to see for me to actually start getting bullish. And Brian's kind of thinking, all right, well, we're getting closer to the bottom than the top. Of course, all the people that sort of came into the space, 3 or 4 months ago, touting what experts they were and how it's a good idea to go and buy Bitcoin at $70,000+. Well, unfortunately, they are being removed from the market. I do find it interesting on the breadth here for the broader stock market. We've been talking about the broader stock market kind of just bumping along here, not really overbought, not really oversold, just really, really wishy-washy. That's the best description I would have for this. You could even argue, S&P is kind of just flatlining here. And what I've noticed here, what I think's happening, and this might be the hallmark for our economy going forward, is uh, good news on the economic front seems to translate in things like the Nasdaq outperforming. AI is going to take over the world, and Nvidia, and of course all the semiconductor chips and all that going crazy on any kind of sort of that's economic activity expansion. And then on the flip side, if we get poor econs, then that supports the idea that maybe the Fed can start lowering rates. And, there's a certain part of the market that's just chomping at the bit for the Fed to start lowering rates. That's ironically enough, usually a good time to step in and buy things like financial stocks. So, just very quickly, if I can do anything quickly, good luck. Yeah, look at that. He's an old guy. If we look at our sector rotation modeling from good old people at Stock Charts, these guys are always pretty good for this. The point here is where are we on this scale? If we are actually at the point where the economy is breaking, then ironically enough, that means the Fed can start lowering rates, which means that the financials actually start doing better. If we are in full recession, right, and actually starting to come out of the other side of it, your tech and communication services and stuff like that seems to do better. So we're kind of like waffling. Where are we on this spectrum? There are a number of interesting sort of tells. As I said, the central banks in China and Europe are starting to lower interest rates because their local respective economies are in pretty big trouble. And that, I hate to say it, but that's exactly what we've been expecting. At least I have. I don't know how many people buy into my fear greed cycles. Actually, what's well, I got a presentation all ready to go yesterday, and as I said, I was stood up at the altar there, which is a little bit upsetting, but nonetheless. Fear greed cycle, just to give you an idea where we are, and I don't really talk about these in the daily briefs too much, but you can see there we are. We are fully into this respective greed cycle, which really should go on till about 2035. I don't really expect to see weakness out of the US market. If anything, you can almost kind of look that, once we get through this sort of US presidential election year, oh boy, and it might even develop through this year, but you can see we're in a window here where I think that the market is going to climb the wall of worry. And it could be quite dramatic upside performance here. But at the same time, too, the commodity related countries around the world, they're going to be in a bit of trouble. And of course, China, this place is an absolute poop show. In fact, actually, we even had on the little screen there that we show on these daily briefs the itinerary, and Chris had put down at the bottom, we're going to talk about Canada economics, and I was like, you better not put that on there because that's just going to trigger me, and then Brian goes off on some crazy ass rants and stuff. If we're talking about like sort of market movement here today in particular, it's not really a hell of a lot. Why? I think that the econs actually today come out, this is a consumer-based economy, and the consumer is not feeling very happy here at all. And if anything, this is a good sign because we had when the central planners absolutely dropped the ball through the whole sickness economy, and they just took interest rates to zero. The US consumer went absolutely apeshit spending wise and completely blew up their balance sheet. And really, I think the end result of all of that was just a massive whack of hyperinflation, which, Mr. Druckenmiller, if you don't want to listen to Brian, listen to Stanley Druckenmiller, was quite upset at the central bank, central planners, Politburo, whatever the hell you want to call it, in this quasi-capitalist communist society we live in now. He was very, very upset at the way that the central planners really fucked everything up. And I think that's half the reason why all these central banksters, who, ironically enough, a lot of them are not even bankers by trade. They don't know what the hell they're doing. Jerry's a lawyer, for Pete's sake. So anyway, point is they've just cranked interest rates up. I mean, 5% in like a year or two is historic. In fact, actually, one of the presentation picks I was gonna do yesterday was on the question is, where the hell is it? This one, cost of money. So, ironically enough, they're actually back on schedule. So you can see there is the insane increase in short-term interest rates very quickly. Usually, the pace of these interest rate increases is relatively sort of friendly. They just went one direction. So obviously, the consumer is and the retail sales, they're finally sort of bringing this consumer back in line. So it is interesting to see, I suppose, also too, that on the weaker consumer information, we had the bond market actually quite happy. The only problem with that is that, and we'll just quickly show you that here before we move on. Bonds, they loved that information about the weak consumer spending, and not necessarily deflationary, but let's call it disinflationary information about the economy. The concern that I have here now, though, is that crude oil prices are heading right back up top. I suppose I can show you. I got a little short on here on crude right now. I don't know how that's doing. It's just working away. But regardless, this is like a 10-minute chart, or this is a Tesla 10-minute chart. But if we look at something like the daily crude oil chart, this is getting scary, because now this is a bull flag, and you can see how all the moving averages are like uber support here now. I would not expect crude oil prices to go back below $77 anytime soon. I suppose if we're lucky, we just sort of bang around here for the next, week or two, and maybe if we're lucky, M out and then head back lower. But this, if it is a bull flag, means, A, B, C, D. I think that they're going to take crude prices right back up to the old highs. And keep in mind, there are these juicy gaps that we need filling in. And, long-term, channel watchers, and of course, students of mine and TRI, what the statistical probability is of them filling in these gaps, which means that all that wonderful deflationary pressure that we had coming out of sort of early April there, all that's going to be taken right away. And unfortunately, this is probably going to cause that inflation deflation gauge to start bottoming and ticking back up. And of course, the Fed's going to be like, well, there's no way in hell we can cut interest rates if inflation data is going to start to tick back up. And, my hunch here is in through these June, July reports on CPI and on core, prices on the, personal consumption expenditure reports, all that kind of stuff, they're going to start ticking back up again. Boo, hiss, hiss, boo. So put it all together, you can see the commodities are trying to catch a bit of a bid here. And also too, and this is an interesting sort of disconnect. Now, I don't think I necessarily have a breakdown on the US dollar just yet. I think if anything, hitting fog and bombs and all that kind of fun stuff, trend line resistance. Is this a megaphone? Could be. I wouldn't be surprised if we're stuck in a bit of a trading range in here. But at the same time, too, very difficult for me to even think about the Fed lowering interest rates in this kind of environment. I'd almost say that we're probably I would comfortably say that we're probably stuck in a trading range. But at the same time, too, you can see where the bottom of the range is. We're probably, V bottoms, probably going to have to test that low anyway. Um, so this should be sort of like a risk on kind of a vote here as we work our way through the end of June and heading into that holiday weekend. Also, too, you can see the divergence here in momentum itself. Willie stupid. So you could actually even argue this is an L Tangonator setup, which means that we probably want to sell that M there. And our price objective should be a 50% retracement of that range. If it's a 2 to 1, well, then the risk is worth taking. 1.83 to 1. Well, that's pretty darn close. Anyway, let's see how that plays out. You can see we're already a good way of the way to the destination. And I wouldn't be surprised, you see this trend line's a descending trend line a la megaphone. I wouldn't be surprised if we trade back down into this level. But anyway, let's see how that plays out going forward. So if this US dollar index is topping out, as we said, weak consumer data, the Fed absolutely has no reason whatsoever to be thinking about raising interest rates in the face of this. The question ultimately is, do we actually see something break in the economy in earnest? And then they can actually start thinking about lowering rates. Well, we'll see how it goes. And as I said there a moment ago, if we have energy prices continually ticking higher, Fed's going to be caught between a rock and a hard place, because if they cut rates, the crude oil market's going to take off. And of course, that's hyperinflationary. This is a tricky market that we're in right now, no doubt about it. And of course, probably best to finish off this conversation with a quick boo at ye old corn. And it's not a pretty picture out there, folks. Weekly basis. I haven't looked at this chart too much in earnest recently. The message has basically been the same. Until we actually close above this 74, 75,000 area, I think we're still very much just stuck in this trading range. Now it's interesting to see the momentum indicators. Are they starting to roll over on a weekly basis? And if that's the case, then it means, this is going to take some time to clean up. We do know that we have like 3 weeks to go until that, post holiday weekend environment where we can get into sort of summer crypto trading out of mom's basement. And you can see, this looks pretty nasty. We're potentially flirting with actually losing this 13 EMA. I like to use the 13 EMA for exactly this reason. You can see how much price respected that. If we lose this, then you can see wicks and tails like to be eaten, and notice 30 SMA is right against that tail. And there's good old Colin. Geez, we haven't heard from Colin in a while. But Colin and his pump chasers sitting here 38.2 to 50%. And we have talked about this all along. 50% is Mr. W.D. Gann's, this is a natural, healthy move, which really should happen here if this market actually is like technically cleaning itself up and getting ready for the next run higher. Unfortunately, I got flushed out of these shorts, which pissed me off. And all I can do is sit here and, just lament about, if I'm really lucky, I can get counter trend rallies back up top into shorting locations to strap it back on. But I have a feeling I got euchred out of this position, which sucks horse, what? You can see that's probably where I'd want to be hunting to try and get short against these highs if there's any kind of counter trend rally into the Fed minutes. We are stupidly oversold, but I don't see any signs of bullish divergence, and I don't see buyers here anywhere. So not really interested to do anything there, especially too if we look at the ETFs. Remember, we had talked a bit about the ETF options expiries here. coming up. Friday is a big monthly expiry, quarterly, really big expiry event. You can see the huge hole. If anything, what I wouldn't be surprised about, keep in mind tomorrow's a screwy holiday anyway. I wouldn't be surprised if they try and fill this gap in, get a little bit of fear going, and then into Thursday, Friday, that's when we have our dead cat bounce, and they bring the market back up so as many puts expire worthless as possible. Also, too, and this is sort of the only sort of little piece of shining glory that I have for this market working right now. Still sitting in this ETH short. I put out messages recently saying, this is absolutely textbook. It doesn't get any more textbook than this short setup, and it seems to be working quite nicely. Stop is at scratch because of my rules about 50% of anticipated moves. And thank heavens we didn't come back and stop me out there. I suppose if you're botting this short on the bot from 3660 area kind of idea, you can see move stop to scratch level is coming up here shortly on the bot. And look where the damn price objective is for this. And this is what I was kind of worried about. I don't know whether it's Ethereum. I'm frankly, it might be various different Schultz. But I put a tweet out the other day saying we had our time-tested moving average system signal. Again, why do I like to use these particular moving averages? You can see the bullish. Hell, this actually has worked really well. I mean, look at that. You had a bullish cross way down here in February off of this double bottom. Perfect signal. That actually topped out here. Beautiful bear cross, a little bit of back and forth here, but then a nice bullish turn here off of this W. And unfortunately, we just got a bearish turn here. So we also do have a fairly well-defined M top. We lost this uptrend line here, and we were flirting with this downtrend line. We've lost it. So as a result, thank heavens we got this 200 SMA that's probably going to act as support against those lows. Remember, I showed you that Bitcoin chart, and probably we're going to go down and eat some tail there. But you could make the argument trendline support, and lo and behold, there's good old WD Gann and his 50% rule sitting down there at about 1.7 trillion on this market cap. And I had put this tweet out the other day when we were sitting here and after confirming that double top and said, oh boy, this could get really ugly, folks. So we're going through it now. Sucks, but we're going through it. So, interestingly enough, as Adam points out, the way that I would look at it, and, this is always a good sort of, is the glass half empty? Is the glass half full? We have our CTO on the call here today, Sjord, and we should just sit and talk about fundamental stories. We should talk about what are projects that look really interesting. And then, right, we just simply say, all right, have we got our names coming into reload zones? And do we have our plans all set up? That when markets do get down into reload zones, depending on what type of risk taker we are, that will dictate your strategy. And of course, if you need help understanding risk modeling and how to set yourself up to act behavior wise in your best interest based on what type of risk taker you are, well, that's what our education program is all about. So really, there's nothing really new going on here. I mean, this has been a really popular one within this space. And I definitely think if you have the opportunity, having a bunch of this on the books is not a bad idea whatsoever going forward. The only question is we weren't allowed to chase. Don't chase, don't chase, don't chase. So interesting now, and this is just a clothesline basis, wicks and tails, this might even be bigger. But you can clearly see, in fact, we could even do like Foggenbaum off of this nice little M top. You can see that the market is setting up. Look at that, 4669 against good old Mountain Man. against market structure bottom and ABCD objectives. So you can already start to see this stuff playing itself out. And, as I've said before, reload zones, there's a reason why I do this. And how you frame yourself as a risk taker is exactly how you should approach this. I think we'll probably leave the free broadcast at that for now. But, I think probably the one thing to finish this off on is the question ultimately is, how do you read this line? There's not really a right or wrong way to read this. But any way you read this, it's perfectly valid. If you do want to actually consider this vocation of trading as a vocation, right, and as like a career path, you have to actually train yourself to buy down markets. And you have to train yourself to sell up markets, which is completely opposite to the way the public acts. And that's why the public always loses money at this game. I'm not even touting this idea right now. I don't think we're near a buy here. But, the way an institutional player would look at this is, hey, this is starting to look interesting. I can actually start to see, windows for price to come into. And because I'm an institutional player, I buy down markets. I'm probably going to be buying the sell orders of the retail public that are panicking and freaking out. And just, sadly, we probably should start watching for things like suicide hotlines within this space. Obviously, for the consumer and the public, this isn't a fun conversation. But as an institutional player, I'm starting to think it's not here yet. We got to get through the end of this month and into July. But I'm starting to read this as, maybe opportunity is now here. But I can't tell you how to read this line. It's entirely up to you and your perspective. All right. Have yourselves a great day, everybody. Let's head on over and hang out with this Sjord Meister, and maybe he can tell us a little bit about fundamental value in this space and projects that look very promising to him. And maybe prices going on sale. He might even consider stepping in and doing a little bit of nibbling here while we're sort of waiting for bottoms to actually start forming. All right. Take it easy. Slow and steady wins the race. If you don't know what you're doing in this space and you're completely lost, this is exactly why I built the Rational Investor website. It's supposed to be a safe place for you to come where you're not going to get shilled. You're actually going to be discouraged from chasing and buying these kind of up markets. And then when the public is not interested, that's when we start getting interested in this market. So ironically enough, we're doing everything that we normally do. It's just slow and steady wins the race, and just keep on keeping on. And is the glass half full or is the glass half empty? I'm a glass half full kind of guy. So as price is dumping down into here, I'm actually getting more and more interested. All right. All the best. Hugs and kisses. Let's head on over and hang out with Sjord. And the only little everybody say to you is bye for now.